fraud and scams are an ever-present and growing risk for every business, especially small businesses. Today, businesses rely on digital and online solutions for everything. Therefore, fraud and scams are everywhere in the digital and online world. Communication tools such as emails, text messages, and voicemails are some of the entry doors used by scammers. Financial tools such as accounting software and online banking are critical infrastructure fraudsters want to access. So how do billionaire investors Warren Buffett and Charlie Munger protect their businesses against fraud?
I think you're asking for a lot if you want some simple way of not being taken in by the frauds of the world. If you stop to think about it, enormously talented people deliberately go into fraud, drift gradually into it because the culture carries them there. And the frauds get very sophisticated and they're very slickly done. I think it's part of the business of getting wisdom in life that you avoid getting taken by the frauds. And so I think you're asking a very good question, but I don't think there is any short answer. I think there are whole fields that you can just quit claim because it looks like there's too much fraud in it. And I think we do a lot of that, don't we, Warren?
Yeah. How many times have we been defrauded in the last 20 years, right?
Well, damn little that we can. It's amazing how little.
Yeah.
And I've always said that the guy who takes us is going to have a modest little office and modest demeanor, and
he'll carry around Ben Franklin's autobiography, I can guarantee it.
The kind of people who defraud us are not going to be the kind of people who are defrauding everybody else.
Yeah, it's a very good question. It's tough to answer, but I will tell you that we haven't and we won't get defrauded often. Now, that may mean we pass up a whole lot of other opportunities, too. Charlie and I have found, actually, at least to us, many of the crooks look like crooks. I mean, we have spotted, we haven't shorted them, but we have spotted a lot of frauds over the years in public companies, and years before, that the roof fell in. And they usually are people that tell you things that are too good to be true, for one thing. I mean, they tell you very mediocre businesses are wonderful businesses for one reason or another, or they just have a smell about them, and in effect, and wouldn't you say that's true, Charlie?
Well, sometimes it's amazingly obvious. Maxwell of England, his nickname was the bouncing check. And 3 weeks before he went under, Solomon was aggressively seeking more business from him, with both Warren and I on the board. It shows how much influence outside directors often have.
Yeah, Wall Street is...
Imagine us extending credit to a guy whose nickname is the bouncing check. You'd think if you wrote it as satire, people would say it was too extreme to be funny.
We have read... Charlie and I, it's a hobby keeping track of the Maxwells of the world, and there's a syndrome. I mean, they give off a lot of the same messages. And I mean, Maxwell was a classic case, but they're time after time. Wall Street is no filter against them. Wall Street loves them as long as they're pushing out securities and the commission.
Financial frauds create ripples that undermine the economic security of countries. The free market economy is based on the idea that when individuals are left to themselves, they take decisions in self-interest that automatically leads to order. Order comes from uncoordinated behavior of individuals, almost like a miracle.
I get letters all the time, and I hear from people who have been taken advantage of in financial transactions. And, it really is, it's sad. And a lot of it isn't even, it's not fraud or anything. For one thing, I mean, just the charges involved, the frictional costs, and the baloney that is presented is tough. Charlie and I have had very good luck in terms of buying businesses and putting our trust in people. It's been just overwhelmingly good, but we filter out a lot of people. And then they say, how do you filter them out? I would say, and I think Charlie will agree with this, people give themselves away fairly often, and maybe it does help to have been around as long as we have, in seeing the various ways they give themselves away. When somebody comes to me with a business, and I probably shouldn't tell this publicly because they'll probably tailor their approach subsequently, but when they come, just the very things they talk about, what they regard as important and not important, there are a lot of clues that come as to subsequent behavior. And like I say, we've really had a batting average I wouldn't have thought we would have had in the people that we've joined with, but it hasn't been 100%. It's been well above 90, and I get asked that, I mean, how do you make those judgments? And I don't know, Charlie, can you articulate the way we do it?
Well, partly we're deeply suspicious when the proposition is too good to be true. Warren once introduced me to a gentleman promoter who wanted to inveigle us into an insurance program, and he said, "We only write fire insurance on concrete bridges that are covered by water." He says, "It's like taking candy from babies." We are able to filter out propositions like that.
Yeah, anybody that implicit in their comments or what they kind of laugh about or all kinds of things in terms of the fact, it's so easy, and it ain't that easy, and we get suspicious very quickly, and the truth is we rule out 90% of the times, and we may be wrong about a fair number that we're ruling out. The important thing is whether the ones we're ruling in we're right about. And so we don't mind. We're looking for the obvious cases of people you can trust.
Unlike many billionaires, Charlie Munger did not indulge in extravagance. Charlie Munger's approach to life was built on caution. He lived in the same modest house for 70 years, resisting the trend of building massive mansions. Munger once said, "In practically every case, buying fancy houses make the person less happy, not happier." Charlie Munger's idea of traveling in style is an air-conditioned bus, a luxury he steps up to only when bargain bus fares are in effect. His strategy was clear: stay away from reckless decisions and unnecessary risks. Let's listen to the story of how Charlie Munger once saved a small fortune from fraudulent client.
I think you really ought to tell about the experience with the fraud claim.
What?
On the fraud claim, the fidelity claim with the guy, you had a very well-known insurance company that you don't have to name names, but where you basically told them just raise the stakes to make the game fair. This was back in the 1960s. Do you remember that?
I don't remember.
Oh, well, I do. I remember it.
Well, tell it then.
Charlie had this tiny little operation which he ran as fund, also had a seat on the Pacific Coast Stock Exchange. The firm was called Wheeler Munger. It was called Wheeler Munger at first. Later it changed itself to Munger Wheeler, and Jack Wheeler said, well, pretty soon it'll be Munger and Company, but that's okay. Jack Wheeler was a very interesting guy, and he had the specialist position in General Motors and a few things. And some employee stole like, I don't know, $12,000 or something like that from the firm.
I remember, he hid the trading tickets.
Yeah, some guy steals some money, and Charlie's firm, Wheeler Munger, was required to have a fidelity bond and all these things that covered dishonest employees and all of that sort. So this guy's clearly dishonest. He's clearly stolen the money. So Charlie puts in a claim for $12,000 or something like that, whatever the loss was, and sends it to this very big and prestigious insurance company. And of course, the insurance company denies his claim. They say, the guy really wasn't employed, he doesn't exist, you don't have a dog, I mean, the whole thing. And Charlie gets this letter back, and they're not going to pay the claim. And so Charlie writes a letter to this very well-known, big-name person that runs the insurance company. And he said, look it. He said, we have this $12,000 claim. And he said, this guy stole the money. And we thought we had an insurance policy against people stealing, paid us, people stole money. And he said, we're in this very interesting position because you've got a bunch of people on the payroll and they're going to get their weekly check or monthly check, whatever they do. So they just say, we're not going to pay, and life goes on. Whereas I'm sitting here and I've got my time. I got to work on this thing, and it isn't worth the $12,000 for me to fool around with this claim against the company, and they'll appeal it and all these things. So he said, I know that you would be offended by the thought that you might be using this inequality of bargaining position to avoid paying at the claim. That never could be your intention. So what I suggest, in order to really live up to your code of behavior, is why don't we make the $12,000 claim, we'll just multiply it by 10 and call it $120,000 either way. And if you lose, you pay me $120,000. If I lose, I'll pay you $120,000. Now it's worth my while. And he addresses the letter to the chairman and says that's the guy. He gets a $12,000 check by return mail. It's not a bad lesson.
There is a popular saying, fraud is a silent thief that steals the future while whispering lies. Fools trust numbers. The wise question their source.